All right, it is showtime. We're going to bring in Tech Trader and give him a warm welcome. What's up, Sean?
Hey, are we green lighted?
Yeah, we are green lighted. We got the action.
Green lit?
Yeah, we're all set and ready to go. Um, one of the things I'm gonna have to challenge you a little bit here to get your perspective on some of these things. I know the last time we talked, you had thought that our next big move in the Nasdaq would be to the downside by 300-400 points or so. So far we haven't gotten that. In fact, we've consolidated and kind of grinded our way higher. Have you changed your stance on that, or are you still waiting on it?
No, I'm still waiting on it. I mean, I just, nothing, every weekend I look at a few hundred charts and yeah, I don't know. There's just nothing to me that is that exciting. Some people get excited to buy stocks at, really high prices, all-time highs, multi-year breakouts, things like that. I'll remind people that if that's what you did last summer, you got smoked. If that's what you did last spring, you got smoked. If that's what you did in spring of 2014, you got smoked. If that's what you did at the highs in 2007, you got smoked. So, again, here's the way I'd frame it. I don't think there was anybody more bullish on the platform than me in November, December. For me, it's sort of like a repeat of last year where, hey, I was really bullish when other people were puking up stocks and I was buying them or holding. And, when the average stock, at least that is in my universe, is up 25 to 50% in 6 to 8 weeks or 5 to 6 weeks, I'm less excited. So, to me, it's really that simple. Here's the other thing. Is there ever a time where the market doesn't do anything except just keep going up and never have a correction?
Uh, yeah, it seemed like for 10 years we had that.
Well,
Really.
but there's always corrections. I mean,
Small
there's
ones,
all
yes,
there's
yes, indeed. Here's my point on this one though, and I don't disagree that
so
we
well.
we could
Let
potentially
me
have
just
one.
finish the thought.
All right.
There's never been a time in history where either subsets of stocks don't have pretty major corrections or the market itself doesn't correct, at least modestly. So put it this way. There's always times when stocks decline and decline more sharply than people think. Anyway, go on.
Well, I look at the chart now, and I'll look at the triple Qs just as an example here, right? And we did have a pretty substantial move from the December lows, but all things being said, we're just hovering right around the midpoint of our most recent trading range from back in, we'll just call it the October highs. Yeah, we'll just call it the October highs to the December lows, and here we are smack dab in the range. So based on your premise, you're expecting a pullback to potentially buy the dip again, but couldn't we just the same way in that same vein have a continue grind higher with small little consolidating patterns and then a push higher?
Yeah, I suppose the market can do all sorts of things. I tend to weigh risk versus reward. By the way, we're going to all-time highs. I mean, we're going to go to all-time highs. So, but it will be much easier to go to all-time highs. And those highs will ultimately be better if we have something wicked this way comes, some selling that kind of comes out of nowhere. I mean, here's the one thing too that I think has become relatively predictable, and that is when it feels the safest, when charts quote unquote look the best. Again, to me, a beautiful chart is something like a docu at 35. Again, I could go off and name 40 other stocks that were 20 and 30 and 40% lower. To me, a beautiful chart, that's a beautiful chart. A beautiful chart isn't a chart where I've missed a 40% move. To me, that's a chart to avoid. So, we'll see what happens. I think the one thing that people underestimate is how fast market conditions can change on relatively little information. And the one thing that the algorithmic trading community is very good at is rating stops. And it's very good at going the other way when people least expect it. and it's very good at making, you know, the late buyers or the late sellers look really, really dumb, like 4 days later. So again, what was the absolute worst trade you could do the last 4 days of the correction in December? Is short stocks. Yet that's what most people were probably the most interested in. And, you know, and same thing, what was probably the thing that felt the best and the easiest to do in late summer, early fall was to buy FANG. And that proved to be disastrous. So I don't know. I mean, to me, I line stuff. By the way, I mean, a lot of my charts, a lot of my sentiment work, sentiment is not hot, but it's elevated. And so, you know, the question is, do we sell off from a really hot or from a smoking hot level, or do we actually kind of sell off more from a level where we sort of digest and then have another leg lower? I mean, again, these are things we do our best to project, but we never really know, right? Mm-hmm. I'm just, statistical evidence would have me believe, and again, you know, there's data here. I don't know, when you have this kind of a move off of a low, you know, you usually, the odds start increasing that you get a correction. I mean, I don't know. Here's just a stat. Again, I've known this forever. In 1999, there were at least 5 10% corrections. There was one 15 to 20% correction. So as hot as 1999 was, just think of that. So by the way, I would almost say that condition, if we have another correction that's relatively swift and brutal and catches a lot of people off guard, probably portends to more upside. So I don't know. We'll see. I put it this way. To me, I just do. Here's the thing. I do what I talk about what I'm doing, right? I'm not trying to convince anybody. You know, I own these stocks and bought stocks cheaper. So from a position of strength, it's nice to sell and take gains. To me, I just keep things simple. You know, so at the margin, I would rather be raising cash than levering up at current prices and given where stocks have gone. It makes sense to me. Somebody might totally disagree and be on the opposite side of the trade, but again, I can't really argue with my results. So, you know, could I push harder? Could I be more levered? Could I possibly make more money? Yeah, sure. But, you know, I want to be in position to have plenty of ammo and to buy things in case that thing happens that not very many people are expecting now. Anytime we get to a point where kind of the whole Twitterverse and the Momo camp and everybody's just sort of saying, hey, we're high and we're going higher, guess what? I'm typically not going to be in that camp. And there's a lot of times it pays off very nicely. There's occasionally where it costs me some money. But, you know, I haven't sold everything I have. I'm still net long. I'm still nicely net long. There's some positions that I have and I believe in to such a degree that I'm not going to sell any bit of it until I get prices that I want. So I don't know. We'll see. I think you're asking a very fair question. I think you're asking, again, what do people want? People want to buy stocks at highs. They don't want to buy stocks at lows. No, I'm not built that way. I want to buy stocks at lows. I want to buy stocks when they go down. You know, I don't want to buy high and sell higher. That's not my game.
All right, and that's fair. And you've been you've not hid behind that particular strategy. But my question, as it relates to your sentiment scores, how frequently does the kind of lukewarm readings that we're getting, so not the hot readings of being overbought, but that lukewarm type sense, how often does that translate into the type of correctional move that you are anticipating, that 300 to 400 point move?
Well, what's interesting, we had a very hot reading, and we've sort of, the reading's kind of been cooling off because you said this, the market's kind of been digesting, going sideways. I mean, here's the other thing. What if we don't get a nasty correction of 300, 400, 500 NASDAQs? But what if we just don't do much for 6 weeks?
Well,
it doesn't hurt to be in cash and wait for one or two stocks to get wrecked. You know what I mean? So, but yeah, I don't know. I don't really have a, I'll give you detailed answers when I have the data. I don't know if I frame my data that way because I've never really looked at, I had all sorts of statistical evidence, and again, I posted on this, day after day for like 3, 4, 5 days in a row around December 24th, where we were just so set up for a vicious rally because sentiment extremes were so high. Again, 98, 2009, 2008. I mean, again, we were at historic sentiment lows. You don't get buys that. I mean, it was the best buy we've had since 2016. So you don't get those very often. So as far as these moderate kind of readings, sell-offs, I don't really have a good answer. Here's one thing I will say. Sometimes you'll get a bigger sell-off after numbers cool off. It's sort of like a stock chart. A lot of times everybody thinks you get the biggest declines from the high. You don't. From the high, you get the spook. You get the first move. But the first move is often sort of a minor move because a lot of people don't believe the move. You just get the same thing off of lows, by the way. The first move where you have a big bounce, maybe it's an earnings, a first good quarter after a couple bad quarters. You get a lot of disbelievers. So the move is a big percentage move, but it doesn't tend to carry. And then you get the bigger percentage move later on, right? So I don't know. I don't have the data, but I would say the odds. Actually, I think the odds of a larger correction now are probably higher than they were like 2 weeks ago. But like I said, I'm not looking for a whopper. I'm not looking for a by the way, I mean, there are plenty of people have come on TV and said, hey, we're going to retest December 24th. I've never said that. In fact, I've said that we probably won't. I've said we might not see December 24th prices for a long time. So, I'm not calling for a retest. We just need a cool. And maybe the market doesn't cool, but maybe a few stocks cool. I mean, I don't need to buy the S&P or I don't need to buy the NASDAQ 400 points lower, but I'd sure like to buy a Roku 8 points lower. Or I'd like to buy, Twitter's still pretty cheap. I don't know. I mean, again, just depends on the name. Skyworks. Skyworks is one I really should have been in. I'd like to buy that stock 8, 9 points lower. There's a lot. Here's the other thing too. This is something you probably wouldn't have asked me. Whenever I see responses or reactions on stocks that are moving, I would say in complete discord from what they should do. NVIDIA, great example. The NVIDIA report was crappy. The headline beat wasn't really a beat. It was only a beat on them guiding numbers really low to the point where they kind of guided to a point they knew they could beat. And then they guided lower again. The same thing with AMD. The AMD report wasn't good. That was crap. I mean, the tone of the conference call might have been okay, but they lowered the next quarter. They lowered the full year. That's not good guidance. Again, it was reported as good guidance. It wasn't. So, there's been plenty of reactions of stocks, especially in the last couple weeks, where it's a FOMO trade. It's not a rationality trade, or it's not a logic trade, or it's not an evidence-based trade. So, FOMO can only last so long, just like panic can only last so long. Because I'm not saying we're the exact opposite of we were November 20th and December 24th, but it's the same vein. It's the same vein. The buying here, and I suspect people buying here are not the people who were buying stocks when they were more attractive. I think it's probably a different pool of buyers would be my guess.
All right.
By the way, there's still buys. There's still sells. There's always stuff to do, but yeah, I don't know. I just, to me, the risk reward isn't as good. I try to put my ammo at the better risk rewards. Yeah, given a 6-week melt up, I'm personally waiting.
All right. Well, let's talk about some of the individual names that you had called out as.
I do have a new
longs or
long we
shorts.
can talk about later today too. So, I'm still finding things. But anyway, go on.
Yeah, for sure. Well, why don't we talk about a couple of recaps? One of the names that you mentioned as a potential short was TWLO, as it was trading up in that 118, 120 area, and it's come down considerably, but a nice strong upward move today, up some 5% or so. now that earnings are out of the way and you've got a better glimpse of the story, do you still view this one as an overvalued short potential?
I do, but I haven't done anything on it yet. I'm waiting. So I have to see the right kind of formation setup. Yeah, I may not do it, but I like it. It's definitely in that larger cabal of names that I think are, will become good tactical shorts. I mean, you basically have a new FANG trade. Nobody's named it. The new FANG trade, though, is, I guess, overvalued cloud. So, I mean, they're all the names I used to be long. And so, now everybody's excited about stocks at 120 that everybody hated at 28 to 30. So, whether it's Twilio, whether it's Okta, whether it's COUP. I mean, COUP damn near doubled off of the December 24th price. That just, again, do you want to buy COUP here? You can. You could throw that often quoted stat out that I'm not sure is actually a stat based on evidence, but the quote is, hey, a stock that goes above 90 it goes to 180% of the time. By the way, I don't know if I've ever seen statistical validation of that. Everybody just quotes that. But so you could say, okay, I'm going to buy it at 90 because it's going to 100. Well, okay, you could maybe catch that for 5 points. Again, COUP doesn't feel like a real good risk reward trade to me. So the one thing I would just say, to me, just, use some imagination. There's probably better things to buy. If you really, really got to buy Twilio, I guess just do some homework, look at the space. You might find something that's a lot better and more attractive with similar characteristics. Maybe you'll find a Twilio at 32, which I owned, instead of a Twilio at 112. So they're out there. There's a few of them out there, but there's not nearly as many now as there were in early 17, early 18. But yeah, no, it's part of the group. Adobe, Intuit, Twilio, Okta, COUP. So I'm not really doing a whole lot on the short side yet. I put that SQQQ up. I'm kind of waiting, kind of toe dipping. I guess I'll know it when I see it, or I'll have more conviction when I see the pattern that fires me off. But right now it's kind of just I'd rather avoid it and possibly trade it later. But yeah, I do think I don't think it's that attractive on the long side.
So what's later? Is it a time frame later? Is it a price later? Or is it something something completely different, a greater valuation? Is it anything that
No,
really
I would
strikes?
say it's a combination of those two. Probably the best way I would frame Twilio now is how I set up AAOI. So, I was pretty patient. I could have said, look, I don't like AAOI at 60, or I probably said I didn't like AAOI at 68 and 70 and 75, but I didn't short it. So I waited until I had a very firm view that they'd hit peak EPS. Peak EPS being like literally Nirvana short. That's my Nirvana short.
Which one?
NVIDIA did the same thing. Facebook basically did the same thing. So, but AAOI had direct money in, and then there's lots of, anybody can go look at the history of AAOI that I posted on that. So I basically think Twilio is setting up to be peak EPS story. I can't, but I wasn't willing to say that yet because I kind of felt the quarter was going to be good. But we're seeing second derivative action, right? So they didn't respond that really super great to great numbers this quarter like they did the prior 2 or 3 quarters. So that kind of tells me the smart money is kind of starting to come my way on it. I mean, here's the one thing I know: the first quarter that Twilio won, and it could be next quarter, maybe. I don't want to foreshadow my own work too much because I don't know that I'm going to call peak EPS on Twilio in 10 weeks from now. But I could. I would say one of the next 2 quarters I probably will. But if the first quarter that Twilio doesn't blow numbers out, this thing's $80 or lower. Might even lose half its value. So it depends how much deceleration that they see. So we'll see what happens. But yeah, just like I say, it's the risk reward doesn't appear favorable on the name, in my view. Twitter, for example, and you know, there's been some consternation. It's interesting on Twitter. I don't know why anybody real being happy on Twitter. I guess unless you bought it at 42 and you know, you didn't listen or didn't do anything on it for the year and a half, you could have bought it between 14 and 20. But you know, like something like a Twitter has so much upside and still has acceleration, still reporting great. You know, actually went down on a good report. They guided very conservatively, which they do. Again, just risk reward on Twitter sets up, you know, magnitudes better than something like Twilio, for example. Now, hey, does that mean that Twilio's next 50%? Could they make a crazy move to 160? Sure. NVIDIA was stupidly overvalued at 200, but it went to 300. But it didn't, you know, it went way below 200 on the descent. So, you know, stocks do crazy things. Stocks don't typically, you know, especially when they get super hot, they kind of do very crazy rational things based on human emotion, just as they do at lows. So yeah, don't want to spend too much time on Twilio. I just, like I say, a stock there, kind of same thing Adobe, same thing Intuit. You know, there's a big group of stocks. Again, we basically have a new FANG. It's probably, I'll have to think of a term for it. Like you and I wanted to name another FANG at some point. It's the cloud. It's the hottest cloud names of the new FANG. So they'll probably be the group that gets hit the hardest. I mean, hey, don't listen to me. Listen to Peter Lynch, right? The guy who really created most of the Fidelity Magellan returns before Vinnick and others showed up. You know, he said when asked what's the one stock you never want to buy, he said easy. The hottest stock in the hottest group is the stock I'm going to most avoid. And I basically play the same book. So whatever the hottest stock in the hottest group, I'm not going to own it. Yet that's going to probably be the most popular stock, and that's fine with me. I will avoid I will take the other side of that.
All right. A couple others that I want to touch on, VEEV and OKTA. These were a couple others that you had highlighted as potential shorts heading into the print. Just wanted to get your thoughts on that before we move on to your most recent long.
Yeah, I mean, same thing. I mean, it's the exact same trade. I mean, that's the other thing too. It's become a group trade. The people aren't really looking at those stocks individually anymore. It's basically a group trade. So I would probably rate VEEV the high. I still like Okta. Okta's still in my focus list.
As a short or a long?
As a long.
Okay.
Still in my focus list. I mean, my cost on it was like 26 or 23 or something. So I very much like the company.
Did I potentially get this wrong? I wrote it down as a potential short here.
OKTA. No, I mean, tactically, I think it could be a short.
Okay.
It's part of a group. It's part of a larger group trade. But no, I don't have the same view on Okta as I do on, let's say, the top 10 in the IGV. But yeah, no, I mean, I wouldn't buy it here. I'm not going to buy it here. 84, 85, I don't have any interest. It was a beautiful long. I came very close to buying this stock. I literally, the day it traded at 45, I was looking at it. I actually had some orders in on it, never got filled. It spiked pretty nicely. So it was literally attractive for about 5 to 10 minutes of that day. So, that's the problem on that name. And that's the other thing too. Just if there's so many willing buyers, I don't know. We'll see. Hey, by the way, Splunk is a name I liked. Did very, very well in multiple times, but had a investment position in Splunk, did very well. I'll remind people that Splunk, while Splunk was producing some of their best quarters, they had a period where they got cut in half. They got cut in half on a competitor. So TWLO Software had a bad report, and in the period that TWLO Software went from 133 to 40, Splunk went from, I think it was 70 to 32. I was a buyer of it. In fact, I think they might have went to 29. I was a buyer of Splunk at 32 in early 2016. Splunk never missed a report. They never had anything, but they went down huge on a competitor miss. So, I'm not saying that's going to happen tomorrow, but, something to kind of be aware of. like I say, I tend to be pretty good at avoiding the trouble. None of the stocks that were major pain trades last year that caught everybody huge, I pretty much warned against most of them. So I'm not too worried about, if Okta goes to 100, I will probably benefit from my longs. So, and I probably have longs that'll go up just as much as they will go up. But if Okta goes back to 50 or 55 or 60, it's not going to hurt me. And I'll probably benefit from some shorts in that case. So, but no, I like I said, I'm not a buyer of it. I like it. I still think it's a very high quality stock in the space. I just can't buy it at current prices. VEEV is much more, I think, much more of an investment short. I think it's much more of a, it's probably less overvalued, but I'm not bullish on VEEV long term like I am bullish on Okta. Like if Okta dropped 65 or 55, certainly 55 or so, I'd likely be a buyer, be a name on my radar. If VEEV dropped 25 points, I doubt I'd be interested in buying it.
All
if
right.
that helps explain that.
Yeah, it does. All right. So you also mentioned that you had a new long. Which name is that in?
BIDU, and I'm going to post it here shortly, kind of saving it for the radio. But here's the thing: their last quarter wasn't that bad. I like the setup into the print, but I'm not buying this because of the print. I just think the print might give me some juice. If I'm wrong, I'd rather buy more of it, 10% lower. So I've got about a quarter of it on, quarter to a third. Started around 170, 171. The calls are very cheap, and that's another thing that intrigues me. I did some common and some calls. So, but I wouldn't bank on them having a good quarter. I hope they miss. I hope they go down and retest lows. I'd love to buy more of it between one. I mean, I doubt I'll ever make it a full position if it never goes below 170. So, and that's fine. If it surges 100 points from where I own it, I'm fine having a quarter of it or a third of it or half of it. But I'd really, really love a chance to buy this, kind of between 150 and 160. And if they miss the quarter, that's probably it. In fact, they might not even retest their lows. The low's 154. I'm not sure they would go all the way down at that point. The option market kind of implies a move to 155 if I'm reading the IV right. But yeah, I like this. I think this is a good value. I think it's been beleaguered by just the weakening China stock price activity. So yeah, no, I think it's a good name. I like it. I like the value. I've had very good success with this name in the past. Not on briefing. This is a name, I like this name off the RIPO. God, when was that? 2006-ish? Can't remember the exact year. I think it might have been 06. I've owned the stock a couple other times. Everybody knows it's the Google of China. Google's not in China. They kind of own the search market. There's a little bit of search competition with some other names, but I think Baidu set up very well. So you basically, all you really need for the stock to work is just Chinese stocks to start working. And I've kind of seen some signs that Chinese stocks might start acting better too. So, but I do like it. And again, they got hit on a prior report that really was fine. They're still clicking off plenty of revenue growth. It's a much better, more powerful company today than it was a number of years ago. By the way, if you look at a weekly chart on this thing, I even didn't realize. I was looking at this weekend. I was like, it's not that far away from the 16 lows. That was the last great buy on it. Before that, you had a weird flash. They had a weird flash crash low in 2015. But even if you take that out, the 15 low was a little lower than the 16 low. The 14 low was also kind of 140-ish. So, I mean, they've added a lot of revenue, a lot of growth, a lot of EPS since 2014. I mean, we're 4 years from that point. This is a much bigger, more powerful company with much better financials than they had. And yet you can almost buy the thing at roughly 2014 prices. I view that pretty damn attractive.
All right, so you see lots of upside here in Baidu, and again, this would be one that you're not holding on for a trade. This is a longer term investment, right?
Well, I hope I nail the trade, but yeah, no, I mean it's more of, I mean, put it this way, if it's 150 after the report, I'm not stopping out. I'll buy more. Put it that way. If it's 200, 210 after the report, good chance I'll probably take most of it off. Although I don't know, I might just take half of it on, let half of it ride. But then, here's the other thing too. This has been a very sharp move lower. I look for these. I like these, especially if it's a relatively high quality stock. Or, I mean, again, you could. I don't know. This is my view. I still think this might be the best China company in China. So I don't like China names typically. I don't invest in very many Chinese companies. This might be the only Chinese company, by the way, I've ever invested in myself. But China's making a huge they're making a huge push into AI. I mean, that's one of their country's goals. If there's a single beneficiary of AI and a company that will likely lead AI investment and AI innovation in China, it's Baidu. So it's kind of a no-brainer. It's a patience trade. I kind of have a sneaking suspicion the quarter might be okay. But I what I really want is one more bad quarter. I'd like to buy more of this between 150 and 160.
Okay, so are you actually going to pull the trigger and get involved around this 171, 172
Oh, I own
area?
it. It's a new long. I own it.
Oh, okay, you didn't post it yet though, right?
No.
Okay, so you saved it just to talk about it on
Saved it
our...
for the show, bro.
Hey, I appreciate it. We always like the real-time insight here. All right, so we got Baidu on the list as a new long, and let's just check and see when they report.
Thursday.
They report on Thursday? Okay. So potential that if you get a drop lower, you would add to this position.
Oh yeah. It's not potential. I mean, I will. It's just a
Well, I
matter
guess
of,
it's...
when I do it, what price, just because the stock is at a point doesn't mean I buy it. I kind of wait. A combination of time and price is always.
All right. You answered a listener question today in INOV. Would you like to elaborate on that a little bit?
Yeah, I mean, I answered that in depth on the on a post, but the biggest thing I've known about this company for a long time. I've thought about buying it a few times. It's been very cheap. It was very attractive. It's doubled off of lows twice. But here's my history in this real quick, and I kind of alluded to this. So I think the last time, the first time I thought it was really attractive was just weeks before Splunk went to 32. And I was lucky enough just not to do anything. And then when Splunk went to 32, again, I think Splunk went below. I just remember buying it at 32. So, and I was a buyer of data at 40 as well, 40, 41, 42, something like that. But I think I got some at 40 even. So I ended up loading up and adding to Splunk, which I had, and I hadn't owned any data for a couple years. And I bought data, and I also there's some I owned Marketo back then. They got bought out. I owned Demandware back then. This was early 16. They got bought out. So the first time I looked at INOV, there were other stocks that I liked. I did great in them. INOV wouldn't have worked actually because the stock was 20, 25-ish back then. Well then, so kind of what I said in the post, and then. So there was a period of time when all the cloud people, cloud stocks everybody talks about now, I owned them all. I owned Okta, I owned Twilio, I owned COUP, I owned Mule. Mule got bought out by CRM. I don't know. I'm sure I'm missing a couple. Again, that everybody. Oh, Workday. I owned Workday. So the bottom line, when I was buying Okta at 23. Twilio. Oh, Nutanix was the other one. So I was buying Nutanix between 15 and 20. I was buying Micron between 12 and 15, although that might have been before early 17. Anyway, during the period for sure when I was buying Okta, when I was buying Twilio, when I was buying Nutanix, and when I was buying COUP, and again, all those stocks are $30 or less. INOV was probably, I don't know, 10, 12, 15. I'd have to look. Well, again, those stocks all did way better. In fact, you could criticize me for not holding some of those stocks to much higher prices. Again, I'm typically not going to be in a stock and be a seller of it at all-time highs because I'm going to get off of it and miss the last third of the total move. But so anyway, those group of stocks I felt were extremely, extremely attractive. And I would say that those were probably better than INO, they have done way better than INOV. So right now, this might be the most attractive time for Inovia. I think it's Inovia. However, I'm now not kind of disinterested in cloud. There's only a couple cloud names I still like a lot. TLNDs work very well. I still like Cloudera. But really, I've put a lot more of my bets into 5G. I like telco equipment names. I like fiber optic names. I like semiconductor companies levered to 5G and levered to, levered to optical transmission rates and bandwidth rate increases and things like that. So I don't know. The problem with a stock like INOV is if it didn't do as well as the better names years ago. In other words, I mean, if you look pretty much any decent cloud company, again, just use Splunk. Splunk, I still think Splunk, by the way, has actually underachieved and underperformed relative to its own fundamental performance. You might say, well, that's kind of crazy. I mean, the stock's gone from 30 to 136. Well, I don't know. There's a lot of stuff. I mean, NVIDIA went up way more than that. And Splunk's arguably had, just as impressive as operational performance and execution and fundamental delivery. So, but if you look at, Splunk has been another one, CyberArk. I mean, CyberArk has reported exceedingly well. Again, it used to be long that stock. CyberArk's really only doubled, maybe from extreme lows has tripled. Splunk is like a 4 or 5 bagger. So if you take Inovia from 16 net to now, it's basically flat to a negative performer. So that is one. Now I will buy stocks like that if I think they're super cheap. I mean, but usually they're cheap because if it's a group trade. The problem is, if you're looking at the cloud space now, and if something hasn't had a good performance, and there's not a reason for it, I kind of would be a little worried about it. Now you might immediately say, well, wait, what about Cloudera? Cloudera is a different deal. Cloudera hasn't been around since 2015 and 16. Cloudera also, they did have a really good spike, almost doubled off of lows at one point. And then Cloudera is part of a group trade where any company that basically bought another company out last year got killed. So whether it's Bristol Myers or whether it's again, IIVI, whether it's CommScope. So there's pretty much any company that bought another company out, especially in the tech space that's not cloud, got hammered last year. So to me, I own some of those companies right now because I think there's a huge disconnect. In fact, I could argue most of them should have increased their value because of buyouts and smart M&A activity. So I don't know. It's like say, it could work. It's doubled off of lows. It's acting better. I think they're about a 20% grower. Their valuation is not hard to deal with, but I don't know. I mean, again, right now I'd rather own Pivotal, rather own Cloudera, rather own TLND. TLND just reported a really good quarter. That's one of my newest additions to the focus list. So, by the way, I think TLND has a good shot at all-time highs. I think that's, so if you're looking for a name, if you kind of missed this cloud move, or if you've taken gains and you're looking for a cloud name that's actually attractive, TLND I think is exceedingly attractive relative to growth. So I don't know. To me, there's just better names. There's just better investments with more upside for the same risk.
All right, we'll stay on the listener question theme, and you actually responded to the one regarding your opinion in CBLK. I know this is one of your favorite names in the cyberspace. Do you want to elaborate on what you do like about CBLK?
Well, yeah, I mean, really at this point, it's really one of the only two names I want to own. I mean, and I think that is the case. I think I'm out of total. I might have. I have to check a couple accounts. I might have a tiny little trailer position and CyberArk actually in a small IRA account. But be that as it may, yeah, I mean, by and large, there's in the cybersecurity space, most of the stuff I think has gotten to fully valued. And I'd remind people that there was a time when CyberArk was heavily maligned. I said it was I went back and looked. I said it was my favorite stock in the space. I ranked it number one, and it worked really well. And so at this point, FireEye and Carbon Black are really the only, I guess I'd call them the only two investable names in the group. And that doesn't mean if your time frame is not sufficiently long, names like Palo Alto and Splunk and CyberArk and things like that can't work. But again, to me it's always risk reward. But yeah, no, I think Carbon Black's fine. I think it's pretty attractive, pretty good growth rate. They're going to report this week. I have no idea if they're going to react really well on a good report. The only reason I would say that, I mean, they certainly could, and I think the report's going to be fine. But we saw Twitter didn't react that good. I mean, we're getting to the point where there's been so many stocks that have spiked. Unfortunately, the companies that reported late this quarter might be the ones that don't get their due if they report well. And that happens. I mean, sometimes you're just a victim of when you report. Unfortunately, Carbon Black and Twitter and other companies probably should have reported, the first 2 or 3 weeks of the quarter, and they would have gone up almost no matter what they reported, because companies were missing and going up on bad reports. So we'll see. I'm not so worried about the report. I just want to see what they do. I want to see what they deliver. I mean, here's one thing I do like about Carbon Black. I actually think their expected revenue growth is relatively muted. So, for example, like the next year, the out years, I think expected to be about 23%. Here, let me look at something real quick. So this was the case with Splunk for years, and the reason I did so well with this is that, each year the analysts were projecting numbers of very conservative growth. And the analysts would be at 35%. I'm like, Splunk's going to do 45 to 50. And sure enough, they did. So the analysts would end up raising numbers. And so right now, the forward estimate for Carbon Black for the out year is only forecasting about 22% growth. I think that's pretty beatable. If they don't beat it, stock's probably not going to go up. But I think that's a pretty good setup. That's worked pretty well for me in quite a few names. Stock's acting pretty good today. I think you just have some late comers probably looking, hey, what hasn't reported? What's a cloud name? Blah, blah, blah. But this is cheap. Like I say, I get to a valuation that's notably higher than this without really any kind of extreme assumptions at all. In fact, I have a lower valuation assumption built into Carbon Black than I do a lot of other names. And so if they basically just achieve their growth, I think the price target could be materially higher. A name that I'm starting to look at as a short again is Checkpoint, by the way. That's CHKP. Not short the name currently, but this is almost the antithesis. I mean, it's like a 3, 4, 5% grower, but it's valued like it's a 23% grower, and so that's one that's sort of on the opposite side of the spectrum. Another one is Fortinet. Fortinet used to be a very cheap cybersecurity stock, and they just became a consistent reporter. Relatively modest grower, about a 13% grower. That's out year. Current growth rate's probably a little better than that. But like I say, I remember when that was a hated stock and from 28 to 32 price range, and it's almost tripled off of those levels. So the cheap stocks definitely work over time if people come around to them. So I'm not too worried about some of these cheap names. But again, I'm kind of de-emphasizing, or I've partially de-emphasized my bets in sort of software. I like kind of some hardware plays, 5G, things like that. But I'm long. I'll be long Carbon Black through the print.
All right, so this next set of questions comes from the same listener, and bear with me on this one because it's regarding a couple of your names, but I think the concept that the listener is asking is he's not thinking about it the right way. So the question is, isn't Twitter's earnings growth decelerating? 129%, 113%, 110%, etc. over the last 4 quarters. And the same thing, noticing Baidu sales also slowing in the last 4 quarters. Looking at it sequentially is not the way you should look at either sales or earnings growth. You got to look at it on a year-over-year basis, not in quarters, because there's lots of seasonality and whatnot that will play into the individual quarters. So you want to look at year-over-year growth as opposed to looking at it from sequential quarters. That's my tip on that
Well,
one. But
I would agree. I mean, let's just assume that the question has validity. So first of all, and again, in some ways it does, in some ways it doesn't. Here's how I look at it. So sequential numbers, first of all, are volatile. So you have to kind of know about the volatility. I mean, so let's talk about Twitter. Okay, so if you're looking at Twitter at a point in time now and saying, well, some sequential numbers are declining now. Well, remember when I liked the stock and said, hey, I think Twitter could maybe achieve a 20% revenue growth rate? That was when analysts were baking in minus 4.5%. And what did Twitter do? They actually did 19, 20. They might have exceeded 20%. So you have to kind of look at things. You can't just pick like one point in time. If you're going to look at something like that, I'd say, well, you probably have to line up your sequential numbers, I don't know, for like the last 16 quarters or something. I would say at Twitter, the biggest thing is that you get the company got ahead of itself at 44, 45 on even assumed revenue. It actually got fairly expensive. It wasn't nearly as expensive as something like an Okta or the Zscaler, which is one of the most expensive companies. But, you're talking about a company that was exceedingly cheap and then it tripled. Well, when a stock triples off of lows, the valuation essentially triples. Now, it triples less the growth rate. But still, I mean, the growth, let's say Twitter clocked in they had a few nice quarters where they clocked in actually 29% year-over-year revenue growth and stuff like that. So I don't know. Yeah, you have to look at stuff. Again, you can if you get 2 point in time, you're gonna miss. You're basically looking at trees. You're gonna miss the forest. That's the best way I can say it. So I just won't put too much relevance in a few sequential quarters. Again, if you're going to do that, though, then you're going to say, well, okay, so how should Twitter be valued from the point that they had all those sequential quarters for 8 quarters in a row with a stock, way over delivered on revenues, right? So that's kind of how I would kind of frame that. But yeah, I think year over year numbers are much more important. I think total revenues. Here's the other thing too. With Twitter, this has become a very easy investment case for me. I actually think the stock is exceedingly cheap on just cash flow and cash flow growth and EBITDA metrics. So, roughly 40% of all of Twitter's revenue becomes cash flow from operations. That's a super high number. That's way higher than all their peers. But cash flow growth is still super good. EBITDA growth is still super good. So just on like a cash flow yield metric, the stock's very cheap. It's probably like a 75% discount to Facebook and Google. On EBITDA metrics, it's very cheap. So there's lots of ways you could frame Twitter. Long term, though, what's going to make Twitter go up is that this thing's a no-brainer to double revenues again. So the question is, okay, so how many years is it going to take to double revenue? There was a time, again, not too long ago, roughly 2 years ago, where nobody thought they were going to double revenues at all. In the last 3 years, they basically doubled revenues again in a period where they weren't even supposed to grow. So I still think Twitter is actually very mispriced. I think the TAM's huge. I think there's lots of ways they could pull the trigger. Their ad load's super low. Their reach is far, far greater than the DAUs and MAUs. I think anybody that thinks only 300 million people are using Twitter data or consuming Twitter data literally just doesn't understand Twitter. Twitter has a reach of, 1.1 billion to 1.4 billion, and that number is about 18 months old, so it's probably bigger now. So Twitter data is actually being used and consumed and viewed by roughly 4 times the MAU number. So the question is, in what ways will Twitter be able to monetize that money in the future? You have to have a little bit of imagination. But if all you ever, I mean, this made me a triple in Facebook. If my view on Facebook was all they were going to do is have desktop ads, I'd never made any money on Facebook, and I would have been bearish on it. But my view on Facebook was they were going to find new revenue streams, and I basically predicted their movement to mobile. And lo and behold, I caught a triple in the name plus, actually almost a four-bagger. And oh, by the way, I left 70 points on the table. So, Twitter is, I think it's still misunderstood. I think just that some stocks just don't get their due. I used to scratch my head why CyberArk just kept trading between 37 and 45. Well, you know what? They're not trading between 37 and 45 anymore, are they? So, companies that keep growing, their stock prices work over time. That's something that will never cease to be the case. So, as long as Twitter keeps growing, as long as the revenues keep growing, again, I think. I honestly think that the mistake the analysts are making on Twitter, they're not actually looking at Twitter on a normalized EPS basis or a normalized revenue basis. They're not thinking what will Twitter's revenues be in 3 or 4 or 5 and 10 years. And if you do that, there's just no way you could really value the stock at the current number. What was the other stock? The other Twitter? He had Twitter and another one.
Twitter, and referring to Baidu's sales growth.
Yeah, Baidu. I mean, so the one thing I think for a company of Baidu's size, I think their growth rate's actually the growth rate's freaking stellar. It's very unusual to get a company that's doing 14, 15, 20 billion in revenues that still has a 20% plus growth rate. By the way, if there's an investment case to be made for Facebook, I'm not super bullish on Facebook, but I'm not, as you know, I'm not on the short side of it anymore. But Facebook is a very large company with a 30+% growth rate. That's exceedingly hard to do. Baidu is probably about, I don't have to look. Yeah, I know they're doing 15 to 20 billion a year in revenues, and for a company of that size to still have a 20% growth rate is frankly extraordinary. So what happens is, this is just simple math. There was a time when Google had a 60% growth rate. Well, then the revenues got to be 4, 5, 8 billion. Well, guess what? Then it was a 35% growth rate. Well, then the revenues got to be 20 or 30 billion. Then the growth rate was 20%. Then the revenues got to be 50 billion plus. And oh, by the way, now the growth is 17% or 13% or something. So the bottom line is, the larger you are, the harder it is to have 60% growth. Mm-hmm. So, but again, for probably the best way to analyze Baidu is do a screen of all the companies of their size revenue-wise. And I bet you'd only find a handful of them with higher growth than they have at their size and revenue. I think that's pretty rare. So I actually think their growth is pretty exceptional given how large of a company it's become.
All right, and I'm going to get you out on this one. It's regarding AAOI. The listener says, this is the worst performing 5G stock. How does it look?
Well, I've always said, again, I was short the name from 90-something. I almost caught a double from being long. The AAOI I'm basically in now is kind of a leftover position from a former long, which was a 70, 80% winner. But even from my very first long on this, I've said this is my least favorite name in the fiber optic space. So, they're going to report. They're going to report soon. At this point, hey, $12.50, $11.50, $10. At this point, they're pretty cheap. So you can probably tell from my voice, I'm starting to maybe get a little more interested in them. I don't know if I've ever added to this for a long, long time. Again, my prior ads were before the stock went up a lot, and I sold most of it, I think, in the low to mid 40s. I kept some of it. I might have added one time. I can't even remember where. Maybe low to mid 20s. Maybe did a little ad. But yeah, again, it's my least favorite fiber optic name. I've always said that. However, everything has a price. I don't know if it's going to hit 10 or single digits. I suppose if the quarter's diabolical. My view of the last quarter is Facebook was gone. Now, as of this quarter, some analysts are just coming to that realization in the last week or two. Again, their guidance as of their last quarter pretty much implied that they lost Facebook as a customer. I don't know. Hey, give me 1250, 1150, 10. It may become one of my more favorite fiber optic stocks. I think it's going to take some time, though. I think it's going to take some time. I have a very small long. I'm not adding to it. I own the name. It's a leftover position. Again, what are the names I've always been very firm on? Acacia, which reports Thursday. IIVI, Finisar. Finisar is converting to IIVI. I have a new long in light, which I bought at 41.80, which is doing great. MTSI is also a name. So again, I've always put like 3 or 4 names well in front of this. And again, I'm not shying away from it, but I don't know. I can't. It's hard for me to think that I've done poor on this name because I don't know anybody else who's shorting this in 90 to 95. I also don't know anybody that flipped the long in the kind of the low to mid 20s and caught that move to 45 to 50. So I don't know. If I have a small leftover position that's down now, I'm just not. It honestly doesn't even bother me. But I'm not buying it yet. I'm going to see the report on Thursday. Hey, let's hope the report's terrible. I mean, I'd love a crack at this thing between 9 and 10. I think at 9 and 10, it's got really good value. And they still have good technology. They're going to get sales. I think that there's just like there's peak EPS. There's also trough EPS. So once you get to the point where you have trough EPS, I mean, look at how Western Digital's performed off of a bad quarter. They're up, 50% plus off lows. Look how well Micron's performed recently off a bad quarter. So we'll see. I think AOI is getting pretty close to the nadir. I think this next quarter is probably going to be their worst. The question is, how fast do they inflect? How fast do they find new customers and have new products that start selling well? That I don't know. We'll have to see. But yeah, I mean, 1250 to 15 probably is pretty good value for this. But I'm waiting on it. There's other names. I mean, I'd much rather buy, even though MTSI, by the way, didn't report great. That stock popped huge off of the low 15s. In fact, it's almost repealed the whole post EPS sell-off, and then they missed. So, and I think that's a very clear stock that will have very strong earnings going forward and revenue going forward. So even right here, I'd rather buy MTSI at $17.40 than AOI at $15.
All right. Well, there you have it. It was good to get you on here and give us a new long trade in BIDU. That was good stuff. We don't normally get that just based on the timing. Just seemed to work out.
BIDU is value, so it's tech value. We'll see. Like I say, I'd really like to buy this cheaper. Here's something I didn't add. I didn't want to mess around and get too cute. By the way, this is how I missed Skyworks. I knew I should have bought some Skyworks. There was a day that you and I, in fact, were on. You said, well, even though it's popped, wouldn't you want to buy some here at 72? I'm like, I'd rather buy it lower. It was just at 62. Look where it is. I should have bought it. I should have bought some between 60 and 70. I didn't. It broke out. I should have been a buyer in the low 70s. I actually kind of learned. So basically, it's like, look, if I get too cute, and if BIDU goes to 225 and I have zero of it, I'm going to be really pissed. So it's like, look, I'd rather buy some of it and get some on at 170 roughly. And if it goes to 150, great. That's where I'd rather buy 2/3 to 3/4 of my position anyway, but I don't mind eating a little. A 10% down move on a stock of this size doesn't bother me. This is a stock I'm almost positive will go to new highs at some point. I don't know when, but it's just pretty easy math to think that BIDU will challenge their old highs. Because again, it's one of the most influential, most important tech stocks in China. And it's not a super expensive stock at 270, by the way. I mean, evaluation, it's pretty appealing to the eye. On price to sales, it's relatively modest. On PE, it's damn cheap. I'm not a big PE believer in tech stocks until they get mature. BIDU is pretty mature. So yeah, I mean, you can almost pencil in a $250 to a $300 stock price if you own it long enough. I don't know when that's going to occur. But the one thing I do know, you get Chinese stocks just in a group moving higher, BIDU is probably going to be a leader of that group.
All right. Well, the next time we talk, we will likely have seen Baidu's earnings, and we will get an update on this one and some of the other ones next week. As always, Sean, thank you so much for joining us.
You bet. As a reminder, Wednesday and Thursday afternoons are big days. So a lot of reports that I cover on those two respective days, even Thursday morning, also a couple names. But still, this probably is the last busy week of earnings for me. But Wednesday and Thursday evenings are going to be a lot of good stuff.
Oh yeah, I can already see it. Thursday, there's AAOI, Acacia, Baidu. Yeah, I can already see a lot of them
Oh yeah,
have earnings.
Dropbox, OLED's another potential name I'm interested in. The key ones would be on Thursday. Again, Baidu, I really kind of hope it does go down. But Dropbox, AOI, again, AOI is really only interested in if it drops up another buck or two. Acacia, though, is an important name for me. I mean, the Solar Group is starting to act better, too. Anyway, I don't want to keep us on, but Wednesday and Thursday, two big days.
All right. Well, that gives us a lot to talk about next week when we have you on, probably Monday or Tuesday of next week. So we'll look forward to getting that update and any new trades that you might have up your sleeve. Thanks a lot, Sean.
And by then, the Nasdaq's probably 300 points lower.
All right. Well, and if it is, we'll talk about that too.
All right, later.
All right. Thanks a lot, Sean. So there you have it. A few bold calls from Tech Trader today. I like that he went out and waited for us to